welcome to Decode Australia. Today is Thursday, September the 10th, 2020. My name is Tamer.
And I'm Laura.
Okay, and we're going to be starting with the EURUSD analysis.
Euro arose against the US dollar on Thursday, increasing the price of the Euro-USD pair to more than 1.1800, ahead of the release of European Harmonized Consumer Index of Price News. The technical bias remained bullish because the price of the pair printing a higher high in the recent upside move, as shown below.
Now, the Euro-US is currently trading around the 1.1810, and it might come across the following resistance levels. At resistance 1 is the 1.1865, which is the high of September 4th, 2020 this year. Second resistance, it will find the 1.1900, which is the confluence of a horizontal resistance area and a psychological number. Finally, it will come across the third resistance at the 1.2010, which is a major horizontal resistance. Now, on the downside, the Euro-US might come across the following support levels. At first support is the 1.1720, which is the low of August 11 this year. Second support is at 1.1707, which is the 23.6 Fibonacci level. And finally, at the third support is the 1.16 psychological number. Now, the technical bias is anticipated to remain bullish as long as the 1.1707, which is a major horizontal support, it being the 23.6 Fibonacci level, if this remains intact.
The statist is scheduled to release number concerning the HCIP news on Friday, which is the September 11th, 2020. According to the consensus of economists, the HCIP registered a reading of negative 0.1%, which is the same as that of the reading negative 0.1% in the months before. The figure of HCIP reflects the price measurements of the Governing Council to assess the quantitative stability of the prices in the Eurozone. Generally speaking, a high reading suggests a bullish trend for the Euro-USD and vice versa.
Now, in conclusion, given the economic outlook of the pair over the past few days, buying the Euro-USD pair might bring some good returns in short to medium-term trading. And now we're going to move on to the New Zealand US dollar analysis.
The New Zealand dollar inched higher against the US dollar on Thursday, increasing the price of the New Zealand USD to more than 0.6600, ahead of the US Consumer Price Index news. The technical bias remained bullish since the price marked a higher high in the recent upside move, as shown in the chart below.
Now, the Kiwi is stable around the 66.70 and might come across the following resistance levels. Now, looking at the chart, you'll see resistance 1 at 66.93, which is the low of September 3, 2020. Then the second resistance is at the psychological number of 67 even. And finally, the third resistance is at 67.88, which is a major horizontal resistance area. On the downside, the Kiwi US is likely to find support at the following levels. If you look at the chart, it's support 1 is the 65.81, which is the 23.6 Fibonacci level, and it's the immediate horizontal support. At support 2 is the 65.16, which is the low of August 21st this year. And finally, the third support is the 65 even, the psychological number. Now, the technical bias is expected to remain bullish as long as the 65.81, which is a major horizontal support area, remains intact.
The U.S. Department of Labor Statistics is scheduled to announce numbers concerning the U.S. CPI. According to economists' forecast, the U.S. CPI registered a reading of 0.2% in August as compared to the reading of 0.6% in the months before. The Consumer Price Index of the United States doesn't include the worst of volatile items such as food and energy to avoid any bias calculation. The CPI shows the retail price movement of the products and services being produced within the United States. After selecting different products and services from the representative shopping basket on a sampling basis, the Consumer Price Index is considered a very important economic indicator in driving the direction of the U.S. economy. Generally speaking, a high reading indicates an upward trend for the US dollar and suggests the bearish market for the New Zealand USD and vice versa.
Well said, Laura. Look, in conclusion, Given the price movement of this pair over the last couple of days, buying it around the current levels could be a good move. As always, only trade with what you can afford to lose, and always apply strict money and risk management techniques.
Please don't forget to follow us on our YouTube channel, Facebook page, and Instagram at Forex Decoded. There's a lot more for you to learn in our courses. Thank you.
Until tomorrow, see you later.
See you next time.